All right, let's talk Northern Star Resources. They just dropped their September quarter numbers, and today on Talker Tickers, we're going to dig right into it. We'll look at the results, what management said on the call, and then, of course, give you our take on where this stock is going.
And right off the bat, what did the market think? Well, the stock jumped over 2%. Now, here's the interesting part. Management literally called the quarter's performance mixed. So what gives? What did the market see that made them so bullish? That's the big question we're going to answer.
And the answer really boils down to this one simple phrase from management. See, even with some operational hiccups, the market looked right past that. They zoomed in on the real story here, which was all about disciplined spending and, you guessed it, costs coming in better than anyone expected.
Okay, so let's get into the headline numbers. Gold sold just over 381,000 ounces. The all-in sustaining cost, or AISC as you'll hear it called, was $2,522 an ounce. Now that brought in revenue of almost $1.7 billion. But here's the number that really matters for the future. Their net cash pile grew to a super strong $616 million. That's a big deal.
All right, so let's circle back to that phrase management used. Mixed performance. What did they mean by that? Well, to really get it, you've got to pop the hood and look at the different parts of the business. And here's a great way to see it. This breaks down where all that gold came from. You can see right away, Kalgoorlie is the absolute engine room of this company. We're talking 53% of all gold sold. Yandal is next up at 30%. So it's pretty clear, right? How these two Aussie hubs go, so goes the company.
And this really tells the story of the quarter. It's like a tale of two different operations. On one hand, you have Kalgoorlie just firing on all cylinders. Costs were great, well below the average. But on the other hand, Yandal had a much tougher time, with higher costs that kind of dragged the overall numbers down a bit.
Now, management also gave a heads up about a little hiccup coming in the next quarter. They had a couple of operational issues that are going to knock sales by about 20,000 ounces. They were super upfront about it, which is good. We'll get to how they're planning to make that up later, but for now, just keep that number in your back pocket.
Okay, so we've got a mixed quarter and a warning about the next one. So I'll ask again, why did the stock go up? It's because smart money, the serious investors, they're looking right through these short-term bumps. They're focused on what's coming next, a really clear path to some serious growth.
And here's the single most important takeaway. Even with the Q1 challenges, even with that 20,000-ounce hit they flagged for Q2, management did not budge on their full-year guidance. They came out and said, we are still on track. They're sticking to their guns, promising between 1.7 and 1.85 million ounces for the year. I mean, you can't get a more powerful signal of confidence than that.
So where is all this confidence coming from? Well, look at this. Their big, company-making growth projects are just ticking off milestones one by one. This is what we call de-risking the story. The giant KCGM Mill Expansion, on track. A key approval for Fimiston South just came through. And the massive new Hemi project, it's moving right along. It's all about execution. And you might be asking, how are they going to pay for all this? Well, remember that huge pile of cash we talked about? That $616 million? That's the war chest. It means they can build out their future without having to worry about money, giving them a rock-solid balance sheet to get it all done.
Okay, so now for my favorite part of any earnings report, the analyst call. This is where management gets put in the hot seat. Let's dig into the Q&A, because this is really where they earn their stripes with investors.
So you could tell what was on everyone's mind. The questions all circled around a few key things. First, was this cost beat for real or just a lucky break? Second, what's the deal with that 20,000-ounce production hit? Is it gone for good? Third, where's the growth really going to come from? And finally, everyone wanted an update on the timeline for the Hemi project.
And honestly, management knocked it out of the park. Their answers were crisp and confident. They hammered home that the cost control wasn't luck, it was discipline. They made it super clear that the 20,000 ounces isn't lost, it's just delayed, a timing thing they'll catch up on. They pointed to a specific pit at KCGM as the big growth driver and, get this, said it's running ahead of schedule. And they put a firm date on Hemi approvals. That kind of clarity, that's music to the market's ears.
All right, so we've heard the numbers, we've heard from management. Let's put it all together. What does this mean for the stock going forward? It's time for the next call.
So this is the million-dollar question, right? Where does Northern Star go from here? Was this pop in the stock just a one-day wonder, or is this the start of something bigger?
In our view, the case for being bullish on this stock is becoming crystal clear, and it stands on three pillars. First, execution. This company knows how to control costs, and it looks sustainable. Second, they are de-risking their future. Every milestone they hit on these huge projects makes their growth story more certain. And third, confidence. When a management team reaffirms guidance in the face of challenges, it tells you everything you need to know about how much they believe in their plan.
So, when you add it all up, the solid execution, the growth projects getting closer to reality every day, and that unshakable confidence from the top, there's only one conclusion for us. Our rating on Northern Star is outperform.
So, if we rated an outperform, what's the trade? Well, here's an idea to think about. We believe the market still isn't fully appreciating just how much money that new KCGM mill is going to make. So, as that project gets closer and closer to turning on, there's a real opportunity. One way to play this could be with long-dated call options. It's a way to get exposure to the potential for a big re-rating in the stock price, as that lower-cost future starts to become a hard reality.
So there you have it. That's our call on Northern Star. And of course, please remember this is not financial advice.